Hi, this is Parker Couch with Homestar Financial, and I'm here today to talk about the closing costs associated with buying a home. If you're in the market to purchase a home, you might be wondering who pays for the closing costs. Typically, buyers and sellers each pay their own closing costs. And in this video, I will share what you should know about closing costs. Buyer's closing costs. When you buy a home, there are closing costs, and these are costs that go above what you're paying for your down payment. Closing costs are your out-of-pocket fees used for items like getting your home loan, having the house appraised, getting the title transferred into your name, and so on. Your closing costs can range between 2 and 5% of your loan amount. And what this means is if you're taking out a $200,000 loan, closing costs could range from $4,000 all the way to $10,000. And the amount a home buyer has to pay in closing costs can vary a lot depending on the home price, the location, and other factors. Typically, closing costs paid by the buyer include your origination fee. This is the fee from your mortgage lender that they use to set up and process your application, to verify your documents, underwrite the file, and close your loan. You have the appraisal fee. This is the fee to have your home appraised. You have title search and title insurance. A title search ensures that your new home's title is clear and no one else can claim rights to the home or the property. Title insurance provides protection against, let's say, undiscovered claims against the property. You then have upfront mortgage insurance or a funding fee. Some home loans do require an upfront fee to insure or guarantee the mortgage. Government-backed home loans like FHA, VA, and USDA mortgages, they all have this upfront fee, though you can roll this fee into your loan amount instead of paying it actually at closing. Discount points. Discount points, they let you buy a lower interest rate by paying an extra fee at closing. You then have escrow. Escrow is set up so that you prepay money that will be placed in an escrow account and then dispersed as necessary to pay for your property taxes and homeowners insurance. I have a whole other video about that. And you'll also have your down payment due at closing, but this typically is not thought of as like a closing cost because it's equity you have. And any earnest money you paid when you made an offer on that house will be credited towards your down payment at closing. The type of mortgage you choose can also have a huge impact on your closing costs. And the biggest of these is mortgage insurance. Mortgage insurance, or MI, is only paid when you put less than 20% down to buy the home. The mortgage insurance helps protect the lender. Now, most mortgage insurance, it is paid with your monthly payment, and it's considered an annual payment. However, there are some loan programs that also have an initial mortgage insurance premium that is called an upfront mortgage insurance premium, and it might be due at closing as well. Let's look at some of these types of programs with this upfront mortgage insurance premium. The FHA Upfront Mortgage Insurance Premium, or Ufmip, the first program FHA home loans which require annual mortgage insurance and an upfront insurance fee. The upfront mortgage insurance premium, or the Ufmip, is equal to 1.75% of the loan amount, or $1,750 for every $100,000 borrowed. Despite its name, FHA upfront mortgage insurance doesn't have to be paid at closing. Most borrowers will roll this cost into their loan amount rather than pay it with cash. Rolling your Ufmip into your loan will greatly reduce your closing costs, but it does mean you'll pay interest on the fee over the life of your home loan. You then have a VA loan funding fee. VA loans do not require annual mortgage insurance, but they do require a one-time funding fee due at closing. For first-time home buyers, the VA funding fee is usually equal to 2.3% of the loan amount, and buyers who've used a VA loan before will have to pay 3.6% of their loan amount. If you make a down payment of 5% or more, the VA funding fee is greatly reduced. VA home buyers also have the option to roll this fee into their loan amount instead of paying it along with their closing costs. You then have USDA Guarantee Fee. Like the FHA loan or the USDA home loan program, it requires both an upfront mortgage insurance fee and an annual one. USDA's upfront fee is equal to 1% of the loan amount and can be added to the mortgage balance to, again, reduce those closing costs. It's important to be aware of all the costs associated with buying a home so that you have enough money to pay those closing costs. And if you're not sure, check with your lender. They'll go over with you your closing costs and all of your options. And there are several costs to be aware of when buying a home. But the great news is that your team is here to help you throughout that entire process. Thank you so much for watching. This is Parker Couch with Homestar Financial. You can connect with me at area code 770-540-4936, or you can email me at parker.couch@homestarfc.com. Thank you for watching.